All right. So the question is basically, how do you prepare coming into every morning, or how do you really decide on what you're going to do that day, or if you're going to do anything that day, right? And so for me, the first thing that I always like to look at, no matter what instrument that I am trading, is always going to be the monthly chart, right? Because the monthly chart is going to give you a longer term perspective. Although we are day trading, we still want to know what the longer term players are doing, because typically the longer term players are the people that actually move the market, right? Um, so you ask yourself, what is the long term trend here? Is it up? Is it down? Is it balancing? Right. And so when we look at the monthly here, we can see, for the most part, to me, this looks like a balance, right? We are in an uptrend, a long term uptrend, right? But the previous month made a new low and finished just inside the T2 month range, so 2 months ago's range. This month, we are completely inside the previous month's range. Now, if we were to break that previous month's low, that 49.91 quarter, that would give us a little bit of change and would kind of indicate more of a downtrend, right? Because then the market would be one time framing down, right? It had made 3 consecutive lower highs and 3 consecutive lower lows. Now, if you want to just use two on the monthly, right? We've had a lower high and a lower low on the past 2 months. This month just opened. Then that's completely fine. And so the next thing that I do is I get out a notepad and I write down levels. This might be kind of hard to see, but we're going to have to save some space here because we're just going to run out of space. Normally I use a notebook, but you write your levels. And so the first level that I want to look at is going to be my monthly level. So what was my prior month's close, right? Prior month's close. And you're really looking for these levels that are close to your going to be, or possibly interacted with on your day trading, right? So if you're not close to it, like writing down the prior month's high, it's great to know it. The likelihood of trading it today, 43.17 quarter, pretty highly unlikely, right? So not really doesn't really need to be written down. But we are looking at our close level. So the previous month's close, 50.67. Previous month's low, 49.91 quarter. So we've got the previous month's close, PMC, 50.67, and the previous month's low, 49.91. Now you could write 49.91 quarter if you really need to, or it's just the extra quarter is really not going to do much for you. Okay, and other monthly levels that I'm looking at. Okay, so we've got this monthly 5 moving average, right? A lot of these banks and stuff, they use these moving averages. This isn't just it's just not a perfect science, but it is something that they pay attention to. So there may or may not be a reaction at a level like that, right? So we've got 50.82 as that 5 MA, 5 monthly moving average. So the 5 monthly average, the 5 MA, we'll call it, sitting at 50.82. Okay, so there's our levels for our monthly time frame. The next thing we want to do is jump over to our weekly chart. Our weekly chart, to me, and we ask ourselves very similar levels here, right? Is the weekly trending? Is it one time framing? Is it in a bracket, right? Is it balancing? Um, and then again, where are the key reference points? Are we at a previous balance, or are we in excess, or is there a lack of excess in this balance? All of these things are key to kind of ask ourselves. So when we look at the previous week's range, we kind of see we're trading inside of it. We did make a higher high, but not a lower low. And then really when we take another step back, we're inside this week from 415. And so that's going to be kind of, really directing you to the weekly is in a balancing state. So we've got the monthly balancing and the weekly balancing. So up here on the top, we can do monthly is in a balance, weekly in a balance. So next thing we want to do, now that we've kind of understood the broad spectrum, is find our key levels from the weekly that we may interact with today, or that may become key, right? So the previous week's levels, the closest one in play really is that previous month's open, and that was the 50-30 quarter. So if we are going to interact with a level, that's probably going to be our key level. So previous weekly open is 50-30. So we have that 50-30. We have the previous month's close that we could look at as well. It's a pretty decent ways away. So, I'm not really going to kind of put too much into that. The previous month's close was 51.31 half, so pretty decent ways away. Not really something I'm too concerned about. A weekly level that I am concerned about is this untouched close, right? We have an untouched close down here. That's that 50.03. Still a decent ways away from it, so I'm typically not going to be writing it down because I'm not going to be having to look back and reference. But that's going to be something that's kind of already labeled on your chart, or should be already labeled on your chart on a longer term, and it doesn't get adjusted every day. It's a level that you're kind of just watching, so you're not really too concerned about it. Next thing I do is switch to the daily. And when we switch to the daily, something that I like to do, right, is take a peek at your economic calendar, right? Wherever you use your economic calendar from, doesn't matter, as long as you have one, or take a peek just so you kind of understand the possibilities of the day, or maybe what could affect your plan coming into it. So if there is a GDP, or if there is a Fed meeting, or if there is an unemployment claims or something like that, or if you're trading oil and it's Wednesday, right, and it's 10:30 on the East Coast, that's a time that you need to be paying attention to. Just, everything can be specific to the instrument that you're trading, so you need to be paying attention to that economic calendar, right? A lot of events that may go overlooked can affect other things, right? The S&P 500 or the ES is not really affected by everything, but it is affected by a lot of economic events. So when we switch over to the daily, that's typically where we like to look, say, okay, well, if there is like a big move, where are some outlier moves that we can get? Typically from the close of yesterday, you can basically take the close and measure 1% up, which would be about 5,100, and about 1% down, which is about 5,000. So as far as that goes, so you've got 5,100 and 5,000 from yesterday's close. That's about 1% down versus 1% up. If there's not anything too crazy, that's probably your bounds, right? If you're having like a move outside of that, there's probably some outlying information that if you don't have it on the reason, well, then you probably need to find it. But that's pretty much your bounds as far as what you need to prepare for coming into the day, right? If there is some big news and you're expecting more than a 1% move, then you move your plan back. But typically for me, I'm looking at 1% in, 1% out, or 1% up, 1% down. because you can't really prepare, oh, okay, if the market gets to 51.71, I'm going to do this. And it's like, well, the market, that's so far away that you're not really day trading at that point. You're more looking to swing trade or more of a longer term trade plan. So we're focused here on the daily. So on the daily, when we pull it up, and I'm looking at a cash chart here, we want to see, is there a short term balance, which there definitely is. Are we one time framing, right? Which we are one time framing to the downside. Are there a lot of common highs and lows, right? Is there an equilibrium being developed? And that's why I love to look at these candlesticks on the daily chart, because it really just makes it easier, where you see a lot of these lines. That's why I like a lot to have hollow bars as well. But you could see right here, we could copy this drawing up here, bring it down, and you could see, look, there's a low that touches here. There's a high or excess that touches here. There's a low that stops right there. There's a close that stops right there. An excess through here. And then today's open was basically on that spot as well. So a lot of, equal spots. You can find them anywhere. And it's nice when you have the crosshair, you just kind of go around. Like if you look at this one up here, you can see tap, 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 tap on the downside, tap, pretty close. This one taps it. This one closes there, right? So you get a lot of equilibriums. And basically what we're looking for is that agreement from price, right? Is that an area where people are agreeing on price? And, you can use those levels as basically support and resistance, right? Should we be underneath of it, it comes back to it, probably going to act as a bit of resistance, because if you have an agreement, right, or a point of control of an area, in this case, like this daily balance, there's a lot of traders, and traders are on both sides of that. So if you trade down from it, the last time that it came from there, when it comes back up, people are going to be more inclined to sell it because last time it was here, it moved lower, right? And so that's kind of just how you gather those. And the next thing that I like to look for is, where's my levels at? Where's my key levels? So if we had a -4 bar, like this bar here, I like to see what's that close, right? So that close from yesterday, 50.46. So come back to our levels, prior day's close, 50.46. Right? That's going to be a key level that we want to pay attention to, since yesterday was a -4 day, and we understand that these -4 days indicate momentum and the possibility that we are kind of squeezing that out of there. Next thing I like to look for is the, some of these daily moving averages are sometimes key to pay attention to, right? So this one here is the 9, and that's that 50.89. So we've got the 9 DMA 50.89. The other ones, I mean, there is that weekly one is pretty close, and may be possibly included here, this 50.26, right? Because we said our bounds are basically 5,000 and 5,100 today. So this is an anchored VWAP here from this swing low. Not something I really pay attention to, something I'm more or less just kind of now watching, because a lot of people are getting into it, and a lot of people, typically if a lot of people are watching something, then it sometimes can have some validity. So if market stops on a dime and I'm not sure why, because none of my reference points are matching up, it could be a swing volume moving average. And then the previous day's high and low, of course, are definitely going to be levels that you want to be paying attention to. Not necessarily going to be writing them down every day, because I'm going to be utilizing the TPO as my main tool. So I'm going to be able to see the previous day's high and low. The reason I write down a lot of these other levels is because on a weekly, we're trading intraday. I might not be able to see the previous week's low or previous week's high because, it could be the end of the week, or it could just kind of get jumbled up in all the profiles. So it's good to just have them. That way you look down, see your paper, boom, it's written down. Like, oh, okay, that's why that number is kind of ringing in my head. We could write down this 5 daily here. It's basically trading at the same spot. It's trading 50.93. I'm not really going to write it down. If references are like really close together like that, like within 5 points, right? What's the point of just writing down a bunch of numbers that are all right next to each other? It's just a waste of time. And if that's really going to make or break your trading, you're maybe you need to do some reevaluation, or some deleveraging, most likely. So the next thing I like to do is jump over to my profile, right? My profile really is kind of the tool that I use to set up my trade plan and help with my trade decisions throughout the day. The first thing I always like to do is look at the last session. So yesterday's session, right? Yesterday's session, basically we got that open down low. We pretty much traded sideways all day. Pop on the Fed, drop on the Fed, close, right? Fed, Powell talking, Powell not talking. Market closes on the low pretty much. Um, try to decide who's in control here, right? Or who we think was in control. Most likely sellers, right? Most of the volume was down low. Market moved up. Look for acceptance inside yesterday's value area. Wasn't able to find it. Closed with lower value, right? This is an overnight profile. Can get rid of it for now. I typically will turn it off once we trade. If we trade both sides of the overnight profile, it typically just becomes absolutely useless. So there's no point to have it on there. Okay, and we always want to pay attention to value based off of where we are at right now. So what we're going to do is now we're going to start getting into our actual plan, and we're going to start from right now, right? There's no reason to try to plan, okay, what I would have done this morning, blah, 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 right? That's kind of useless information. What are we going to do right now? So right now we look at the profile, right? We got this open up higher, opened actually above yesterday's value, traded back all the way through yesterday's value, and is now trading back inside yesterday's value. You can see the value area lines are these little gray dotted lines. So what are we thinking here as far as the odds of value? Where's value going to finish? Typically, what I'm thinking here is probably going to finish inside or maybe overlapping to one side, depending upon how the rest of the day goes. It is 1 o'clock already, so we've only got 4 more TPOs. So not too much of a possibility really to develop value any higher, or unless there's a big influx of volume. I think a lot of people are probably waiting for the Apple earnings today after the market before they make any kind of rash decisions or any bigger, longer term decisions. And then of course, the jobs report that Powell referenced yesterday on Friday morning is going to be the biggest key, I think. So when we look at this, we say, okay, well, what's the first thing that we want to do, right? Well, we want to identify some ranges that we think people are going to like, right? And so we're looking at today's profile in reference to yesterday's profile. And we kind of see a little ledge here and a little ledge starting to form here. So we take this level, drag it over, and we're at about like 68 to 73. Right? That's kind of the top of this distribution. And so basically what I'm thinking is if we get buyers in this area, then most likely we trade back to the open, right? Which was whatever it was, like 50.84. The exact number is really not that important, right? And that is basically what we're looking at as far as distribution theory, right? So distribution theory, if they can't get acceptance back into this lower distribution, then they should trade higher. And if they do, that's what I'm looking for is to the references, right? Because typically when we're inside the previous day's range and we're in a very narrow, well, 52 points is kind of narrow for most recent traded, but still pretty decent range by all means. Typically, short time frame traders are going to be at that level, so the market could reject from there. And if short time frame traders are in fact in control of the market, which it does look like short time frame longs are in control of the market, right? Because we've kind of identified a little bit of sequencing here as far as this low, right? This C low looks like it's exactly off of the settle. These two lows, I'm not sure what they are. What's that? CD, E low, and G low are basically right off of each other. They're right off of yesterday's point of control as well. So very mechanical. Mechanical buyers are in charge. And if they're weak, right, then they're not going to break the open, or if mechanical sellers are going to want to come back in, they're not going to break the open. So that's going to be my first target, right? Not a bad target. Let's say if it comes down and we get filled here around like 72.70, start targeting that open 84, a little 12 pointer there. That's a good day trade in my opinion, right? The next level up that I would look for is really where's the wide TPOs at up here. So where's our next distribution? Well, the next distribution's up here. So just drag this level over 5,100. What is 5,100? Well, 5,100 is 1%. The average, move after 1% is typically, just that. Right? The market typically doesn't move over 1% per day. So that's a little ambitious. So what I want to do is I want to find a little delta level, right? Which happens to be right here, 96, and just kind of front run that 5,100, right? 5,100 is a very psychological level too. So it may act as a magnet. But I like to kind of front run, and you can kind of chase up your stop loss. Once you get past your first take profit, you can start to kind of tighten up. You have the previous day's high, of course. So if we break the current day's high, so if we were to break the open and not the current day's high, all your trades should be exited once we cross back through the open. And if we cross back through the open and you close your trade and then the market goes up, well, guess what? You're fucked. Life happens. Get back in if you're so confident, or if you're not, make a new trade plan, right? Set up the new trade. That's, I think, people's biggest issues is that they set this trade plan up and then, a trade goes or it doesn't go. And then instead of making a new trade plan, they're just like, okay, well, I'm ready for this next one. This is going to be a buy here. Like, and it's like, well, is it? Like, do some readjusting it and some reevaluating. Okay. So we have that first idea. Now we have to write it down, right? Because drawing arrows on the board is great, but if we're not writing it down, it's not really going to be very helpful, is it? So we'll say if the market is able to hold the upper distro / value area high, look to get long versus the point of control to the open and current day's high. At the open, trade will need to be re-evaled to stay in, because short time frame traders are in control. Day. All right, so that's basically the first step, right? And I do this every single day, and pretty much with every single trade. I don't really take a lot of trades that are not planned. sometimes somebody shoots me a message and there's like, hey, this is going on, and I'll do a quick glance, maybe not make a full trade plan, but for the most part, I'm going to be looking at everything. Okay, so what's our next play? Well, the next play is that fade from the open, right? That's a nice play because we know 1%'s right here. Right, so we know 1%'s up at 5,100. So the odds of these short time frame traders really pushing the market outside of a 1% move, not great. There is some possibility of some short covering as we are one time framing lower, but those people are not too worried because they've got up to 51.30, 51.28. They're protected up here, so they're not too worried about it. So what I'd like to see is if we can get up to the open and we just stop on a dime on the open, or if we get up above the open and fail and can't take that open, well, then I'd like to fade back down to this ledge, right? I'd like to fade back down to see if we get acceptance and look for that possibility of a trade back inside the previous day's range. So number two, I'm going to look to fade the open if the prior or current day is not taken. So you want to give yourself a reason, like, or talk about the trade, right? So I'm looking to fade the open if the current day's high is not taken, right? And then you give yourself a reason. Short time frame longs in control. And then you could even write evidence sequencing, right? And then your sequencing, you can say, if you zoom in, what did we say that was? What, C, D, E, F, the E, and F low, right? Looking to take the trade back to the distro and then write the level 72 so that way you don't forget it. And then continuation. So re-eval if no buyers, look to the POC, right? And then everything after that is just fucking whipped cream anyways, right? You're day trading and you hit, let's say you get short the open, which is, what do we say, 84. This thing gets all the way back to the point of control, 60, right? If you're too unhappy to take that trade, right, you're just a greedy pig. And they say bulls and bears make money and pigs get slaughtered, so don't be a pig. Okay. And then really there's no third plan from there. You know, if we get back down to the point of control, do you really want to be buying right there or selling right there? If anything, I would say the third opportunity here is reality. You're looking for this market to break sequencing. So you'd be looking for the market to trade below this low here, which is that 54.50. Right, but then there's another distribution here and the COT VPOC. So there's a lot of levels it's going to have to kind of fight through. If anything, I would say break below the settle. And this is kind of how I come up with my chop zones, and this is, I guess, a good spot to bring it up. You basically have all these levels kind of tied up together, and because of all of the different time frames that are going to be interacting in this area, and even the previous lows right here, you're probably just going to chop around in there, right? So you're probably just going to it's going to be kind of back and forth. There's maybe some winning trades on both sides of the market, some scalps, right? Some opportunities, either or, right? So basically an area where I'm like, I'm not fucking doing any trading in there, right? Unless it's a scalp, and a scalp, I'm talking like 2, 3. Sometimes you catch a runner on a scalp, right? So sometimes a scalp turns into a runner. That's awesome. But a lot of times you get 2 points in a profit. If it's not running, just take the profit, right? Because a lot of times what happens, it gets 2 points in a profit. People move their stop to 1 tick into profit, comes back down, takes them out for 1 tick. And then they keep doing that and they get on the wrong side eventually because they're gambling in a chop zone, and then they, take a loss, and it wipes out all those 1 tick winners that they had. And really, mental capital is just wasted inside those areas. So don't trade them, right? Or you can trade them, but just understand what you're getting into. So what am I looking for? Number 3, trade below the prior day's low. All these references kind of get ended. You do have a small possibility that you make that poor low, but what do we say below that 5,000 is kind of our level down there. So we've got some opportunity to the downside in that situation. Right, here we are coming up on the open. Play number 1 worked out like a charm. And this is the importance of making the plan, right? It's happening in real time. Our next level down from that area is the 5003, right? 5,000 we said is that 1% move. So that 5003 really becomes that kind of next level look. So what we do, we say number 3, break of prior day's low should test current day's low if break and hold will look to trade untouched settle, which is the 5003. Okay. And then basically on that trade, we would be looking for the market to stay below. So we're look market to stay below 5046, the settle, right? And tempo should increase, right? And why should the tempo increase? Because we're breaking below the settle, and we know yesterday we had a -4 day, so the momentum should start to increase. Pretty kind of easy to tell. I'm sure probably some of you guys hit that long trade in B period. I mean, it looks like a perfect trade. I wasn't on the computer this morning to trade it, but you get that 45-degree angle yesterday. Smash some excess on there, trade right to that virgin point of control, trade back inside above the previous settle. Sellers try again. They can't get below the settle. Boom. Thanks for the free money. Caught VPOX there as well. Take it higher, right? Doesn't go, it's not a huge winner, 50 to 70 or 50 to 60, but it's 10 points. 10 points is 10 points. So, you pick up 10 points a day for 220 days of trading, you're going to do pretty well. And remember these 10 points, right? 10 points might not seem like a lot, but 10 points, when you start building your bankroll and you start getting 10 points on 4 lots or 5 lots or 10 lots or 100 lots, right? So that adds up big time, especially when you're doing it consistently day in and day out. But that's pretty much it. That's how I set up the trade plan. This has been about a 34-minute video, and that's typically about how long it takes. I wake up in the morning, go outside, get some sun, especially now that it's warm. Start making my kids lunch, start, hassling my kids to hurry up and get ready so we can leave, take them to school, drop them off. My daughter gets on the bus at 8:20. I sit down at the computer and I make my trade plan until about 9 o'clock when I jump on the Discord with all of you guys to start the session. And then I basically regurgitate my trade plan to you guys. Um, and it's easy because I've already written it down. So it's not really kind of thinking on the fly. It's more just I already have my trade plan and then just share it. Um, and it's a lot easier, I think, to make it when you're not interrupted. So no, no kids coming in asking you anything, no spouses asking you, I need that lawn mowed today, right? No distractions at all, right? It's really hard to focus, especially in a job like this, when you're getting distracted with certain things. So try to make that time. If that's the only time that you can spend undistracted every single day, that's the time that you want to be undistracted, right? Easy to do a bench press when you're distracted. I mean, I don't even know if I ever work out by myself anymore because my kids are always in there, well, my daughter's always in there working out. My son's always in there fucking, asking me questions about how come when this Earth gets close to the moon, the sun doesn't pull the Earth's moon into its own gravity because its gravity is stronger than the Earth's. And I'm like, holy shit, it's too fucking early for that. So, like if that's a trade that's or a question that's getting asked me while I'm making my trade plan, I'm gonna, that it's gonna pull me off. So I'm not gonna be able to focus during that. But other than that, I mean, that's pretty much how you want to do it every single day. And like I said, it takes about 30 minutes. So if you can figure out that time to make that 30-minute plan, do it. Now, we just did it kind of on the fly here while the market's going. Um, but you can do it whenever. You can do your trade plan for tomorrow when the market closes, right? And it's actually it's a really good practice because a lot of times you can see, and sometimes it can be frustrating. You get up in the morning and you see, oh, overnight did exactly what I thought was going to happen, right? Well, maybe put some trades on, right? You know where your risk levels are at. You know where your profit levels are at. You know what you're looking for. Put the trade on. You get up in the morning, you have a winning trade. That's great. Get up in the morning, you have a losing trade. Well, you're wrong. So that's bound to happen. And you'd actually be surprised. I think a lot of people would be surprised as if they were to just put the trade on and let it work, win or loss, predetermined where their stop was at, where their take profit was at, and didn't touch anything. Right? As long as they made a proper plan and let the trade play, it, most times I think probably be out winning the trade. And typically this here is what I'm looking at. So these words and these numbers are pretty much what I'll have on my desk, on my notepad, written down every day, and they're easy to reference, right? And so, I'm looking at the upper distribution here, right? It's a little less specific because we're making an intraday plan, but the levels would be, based off of yesterday. We started to put them in here. And then these key levels, right? So the market's trading at 50.75. Is that one of our levels? No, but what do we just trade up to? 50.85, and one of our levels is 50.82, right? Well, that's a monthly 5 moving average, right? So probably a key level, and why we didn't really, when we popped the open, didn't take the high, and now we're trading back below. That's probably why, right? At least that's what I chalk it up to, because there's no real. I mean, you could try to explain it 1,000 different ways, but if you have something there, the 5 daily SMA or 5 monthly SMA, that's probably what's going on. And if we want to get a little bit more in depth to it, we pull back up our chart monthly. Oh, where's the monthly at? I gotta erase all this shit. I can't see anything. Our 5 monthly, right? Which typically acts as a trend mechanism, right? Because it's, for the most part, if you look at this five, it's either moving higher or moving lower. We're basically getting resistance right off of it. So kind of use it. Oh, well, they must be selling it, right? So there's some sellers there. What kind of sellers? Probably someone who's looking at a monthly chart, right? Are they selling heavy? Well, the only way to know if they're selling heavy is if we come down and break our mechanical levels. That's really going to be the telling factor if we break these mechanical levels. But yeah, that is pretty much it. That's how you make a trade plan. And you can do it on every ticker or every instrument that you trade. You just have to, find out how those trade. Sometimes they trade differently, right? Sometimes ledges aren't respected on certain things. Sometimes things are very mechanical. They're only looking at highs and lows, opens and closes. Sometimes they're really mechanical, only looking at moving averages. But once you start to trade an indicator, or really just watch, because that's the most important thing, a ticker, more and more, you'll see what it respects and what it doesn't respect, right? But you always want to have those numbers written down just in case, to be able to quick reference, because it's sometimes not as easy to switch back over to your monthly chart, right? Especially if you don't have a lot of screen space or you're trading on like one or two monitors, it's tough to have all that in there. So um, that's really what you're looking at.